Hey everybody, so I just wanted to make a quick overview video and I just wanted to start out by looking at the S&P 500 heat map. So if we're just looking, yeah, it was a pretty bad day for the stock market. So we see Amazon sold off heavily, Tesla, I mean this was down 6.55%, that's a lot. Google down 3%, Meta down 4.68%, Nvidia down 4.33%. Apple, Microsoft down a little bit over 1%. And really, probably the safe haven right here was in utilities, as you guys can see. So let's just go over some of the news that went on today. There was a lot of China FUD. So right here on Sunday, we saw the subvariant BA.5 show up in China. So that's really shaking the markets. So let me just skip right to this news right here. So it says on Sunday, authorities in Shanghai said the city found its first locally transmitted infection of the Omicron subvariant BA.5, which had been traced to an earlier imported case. Now the dominant strain in the US, it is considered the most infective version yet of Omicron because of its ability to evade immunity built up by previous infections and vaccines. So, what this essentially means is that the market is terrified of more potential lockdowns going on in China. Now, that's going to exacerbate any supply chain issues we have, and it's definitely going to create a lot more FUD if we see that in company guidance. So, definitely something to be wary of. It's something we need to pay quite a bit of attention to because right now we're already having a lot of trouble with inflation, with interest rates going up. And, the last thing we need is this COVID FUD from China to basically resume again. So, it's unfortunate, but something we got to keep an eye out for. Now, here's another piece of news that happened. So, we basically had a large Chinese bank protest that was put down with violence. So, if I recall, this has kind of been going on for a while, where we saw some banks freeze deposits. Now, I believe this was going on since April of last year, and this was in Zhengzhou. So, it started out as a peaceful protest, and it was shut down with violence pretty quickly. So I could just kind of show you guys a clip just so you guys can see what's going on here.
Hundreds of local security personnel, many plainclothes agents charging towards this crowd, forcibly removing everyone, including the elderly and children. Anyone who resisted got kicked and punched, as some sustaining injuries and got sent to local hospitals, according to some protesters. And most people got taken to nearby makeshift detention centers. But
So yeah, a lot of FUD going on in China, and just another reason probably to stay away from a lot of these Chinese stocks. Now, I don't believe that today's drop was entirely just from all the China FUD. I think a lot of it has to do with anticipated higher CPI and 75 basis point rate hike. So let's just go ahead and go right into the technicals. So if you guys watched my video yesterday, I was talking about how I felt that the market was very overextended. Now, if you look at these Bollinger Bands, you can kind of see that we essentially hit the top of this Bollinger Band, which remember represents two standard deviations from the 20-day moving average. So we hit the top of this band, and as you guys can see, you know, this was the top, and we rejected off this top right here. So people recognize, people really use these Bollinger Bands, and they recognize, hey, this is the top of the Bollinger Band. Now we need to pull back a little bit. Now pay attention to where we actually pulled back to. I think this is very interesting. So if you look, so let me just zoom out a little bit. We have this trend channel right here. Now where we actually fell to was the top of this trend channel. We bounced off that, and now we're slightly above the 50-day moving average. So 50-day moving average is at 144.69. We're at 144.87. So yeah, just look. As you guys can see, the bottom of this body is sitting right on the 50-day moving average. So this brings us to a very interesting point. So right now we do have this trend line. We are kind of in this small uptrend right here. If we're just ignoring this downtrend right here, right now we're currently in this uptrend. So if we do break below this trend line, I do believe we could come right back down to test this trend line. So that could be seeing like something in the low 139s or possibly something in like the low 140s if we were to come back and retest this trend line. So that's what we're seeing for Apple right now. And if we are to rally off this point, I do believe that 150 could be strong resistance. And let me just show you guys why. So as you guys can see, this was a prior support area. And once we broke this area right here, we really had this massive rally. And you can also see that once we broke underneath this area, we had a massive sell-off. So I do believe this 150 area could be some pretty strong resistance if we do rally off this area. Now, if we're looking at Google, I mean, Google also hit that same upper band right here. So we were heavily overbought. And now we're pulling back a little bit. But the interesting thing about Google is that we do have this resistance trend line that we momentarily broke above. Now we're back below it. So, this is going to act as resistance again. And this is right around 137. Let's see, 137, or it's like 2,380. That's what I meant to say. So it's right around 2,380. So this is going to act as resistance again, because as you guys can see, there's resistance right here, right there. And then we really had to push to crack above here. And we really only hit this upper Bollinger Band. So now we're back around here. And we could possibly fall back to this 50-day moving average at 2,272. But we'll kind of see. I mean, right now Google is a little bit hard to tell just because there's that stock split going on. And we have all this economic data. So we'll see if it actually wants to get back in this range, which is right around 2,380 to 2,492. But as of right now, if we do continue this downward momentum, then I'm thinking a retest of the 50 will be very likely. Now, with Microsoft, as you guys can see, we did have that curling out that I was talking about the other day. So now it's looking like a double top right here. So we're kind of sitting on this 50-day moving average, which is at 263.97. So we're slightly above that, but if we do break below that, I do believe we could go back and test this trend line right here, which is our short-term uptrend. So if we do go back, test that trend line, I believe that we could probably go right back to this prior gap zone right here, which is right around 261-ish. Now, if we are to see upside from here and we just bounce off this 50-day, then, I feel like we could hit maybe the top of this Bollinger Band. So right around 273.33. And that does line up with this prior support right here. Now, Tesla. Ooh, I thought Tesla was very interesting. Let me just kind of point out what happened here. So if we're looking at Tesla, let me just zoom out. I'm going to take out the Bollinger Bands for a second. So if I zoom out, we have resistance right here, support right there. We have support right there, resistance right there, and what do you know? Resistance right here. Now look where we have support. We have support right here, which is on this February 24th day where we built this massive candle. So we literally went from resistance to support right down here. So that was a full, basically $50 move here. So pretty interesting to see. And let me throw on the Bollinger Bands. So if you look at the Bollinger Bands, we were actually very overbought. We actually peaked out above this Bollinger Band, but then we went right back within it. So now you can see that today we actually hit the top of this Bollinger Band and we sold off heavily. So let's go ahead and take it off again. So where are we right now? We're literally pretty much wedged between this 20-day moving average and this 50-day moving average. So if we do lose that 700 level, which has acted as support many times before, I do believe these lower areas, that 625 area, could come back into play. But right now we do have this short-term uptrend, and I'm not really sure how strong this support line is right now. It's really only had 2 bounces. So we'll see if we do bounce off the support line, if we do break underneath this 20-day moving average, which is right around 700. Now XLE, I do think that I saw some interesting developments today. So if we do continue and we have like a sharp knife down from here, then I do see this wedge right here, as you guys can see. So if I'm drawing these tops, then this could be a falling wedge right here, and this falling wedge does happen to run right into this support line right here. So if I take out the moving averages, it's a lot more clear. So support right there, support, 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 falling wedge, and then we could run right into this and then have a bounce if we continue to knife down like this. Or it's entirely possible that we do go sideways for a little bit, but we'll see. But right now, this is kind of what I'm predicting. I'm predicting a falling wedge. If that doesn't happen, then it's probably not a falling wedge anymore, or it still could be, and then we just draw it from a different point. So we'll see. I mean, we'll play it by ear. Now let's take a look at XLF. So XLF is still in this falling wedge pattern. It's really just chilling directly on this top resistance line. So we're really just waiting for bank earnings to figure out where we're going to go from here. Either we're going to have one strong knife down, or we're going to break out and we're going to have a strong rally. So obviously one of those two is going to happen when we get these major bank earnings going on. But if we are just looking, XLF is so oversold right now. And we are kind of at these prior pandemic highs. So I am kind of wondering, if we do sell off, how much more could we actually sell off? So that'll be interesting to see once we get all these bank earnings coming in. So HGX, so I talk about this every now and then. It's the Philadelphia Housing Index. So sometimes we see this move a lot faster, and it gives us hints. So if we're just looking at the last few times we broke above this 50-day moving average, we made a sharp break, we hit this upper trend line, and then we had a hard reject. So we saw this again right here. Broke above the 50-day, hit this top trend line, hard reject. So now we're back at this 50-day moving average. What's going to happen next? Are we going to have a rally, break above this 50-day moving average, hit the top of this trend line again, and then have a hard reject? Is that going to happen again? I mean, if we're just looking at the last 2 times it happened, I think that it's highly likely. So, it could be entirely possible that maybe as soon as tomorrow, maybe we just see some sort of rally. I'm not really expecting, I'm just kind of speculating. If we do see some sort of rally, maybe this just breaks above the 50, we hit the top trend line, and then maybe come CPI date, that's when we have that sharp fall. So we'll see. I mean, I'm definitely going to be paying attention to HGX. See if it just rejects off this 50, or see if it breaks above, hits that trend line, and then rejects. So now we're looking at SPY. Not a lot happened on SPY here. Let's just take a look at the Bollinger Bands. So, I wouldn't really say it was overbought or really oversold here. It's kind of just chilling in the middle here. So we do still have this gap right here. The 50 is still all the way up here, so still got some work to do if we do want to hit this 50-day moving average. We didn't quite make a double top. We actually faded a little bit sooner, but still a little bit hard to say because we do have bank earnings, which could affect SPY quite a bit. So if we do fade further, I do believe we could hit this 20-day moving average right around 379.75, which kind of lines up with this trend line. If we do break below this trend line, then I do think things could get ugly, and this bottom trend line could be in play again. So we could potentially make another lower low. So we'll kind of see what happens, but it's going to be heavily dependent on CPI and bank earnings. Now with the Qs, so yeah, the Qs aren't crazy overbought right now, but it is a little bit more bought than it is sold, just looking at the deviations here. So the one interesting thing to note is that we did break out of this wedge. We did have a pretty clear double top almost, as you guys can see. So let me just go ahead and drag that down. So pretty clear double top. It's a rejection off that 50-day moving average. So it is a little bit more significant. Now, if we do fade, it's possible that we could just fade and we could hit the top of this old resistance line, which kind of lines up with this 20-day moving average. So, you know, if we do hit, I mean, what I do believe could act as support is if we fall, we hit this upper trend line, and we also hit this support trend line right here, then that'll be two areas of support. And then if we bounce off that, I think that'll be slightly bullish. And, you know, maybe we could get a small run off that. But that's kind of what I'm thinking about for support. Now, if we do break above, you know, I'm thinking that we could close that gap right there. And that's going to be right around 299. So we'll see. Lastly, with the VIX, I thought the VIX was pretty interesting. So you guys saw this trend line right here. We invalidated it the other day on Friday, but now we're getting right back, we're bouncing right back onto this trend line. So we're not quite on it. We're literally like just, well, I guess we are on it, but we're not on top of it. We're basically on the trend line right here. So we'll see if we do start getting a little bit more bullish on the VIX, then yeah, we're going to be bouncing right back onto this trend line, and then we'll see where that takes us. But right now, you know, what I would have liked to see was just a very clear bounce off the 200, but it didn't quite reach there. So kind of play it by ear. I do believe that the VIX is more likely to rally just because of that CPI print that's going to happen on Wednesday. So it's very possible that tomorrow, you know, a lot of people will start hedging for that CPI print, and, you know, the VIX could rally a little bit higher. So that's basically all I got for you guys. I hope you enjoyed the TA and just some of the news early on, and hope you guys have a great day.